Welcome to your Airbnb acquisition and financial model for 20 years. This model will definitely be your most coherent and simplest to use of all financial models. Let's go straight to the index. Your index has an input sheet, cash flow statements for 20 years, income statements, balance sheets, valuations, and a dashboard summary for your convenience. We go to the input sheet. The input sheet is, as I mentioned before, very coherent and easy to follow. We've got purchase and income data, your purchase price, your expected rental escalations per annum, growth in value per annum, transfer or acquisition fees. You'll input here. Below are your mortgage inputs. Below that again are your standard expenditure items such as utilities, property taxes, insurance, etc. Only the blue cells need to be completed by the user. All the white cells are automated for you. Here we will have the capex amount, the furniture equipment that you will employ in the Airbnb, and the number of months, the lifespan of these items, so that we can calculate depreciation for you. Below that, your projected income, your various months, your days occupied per month. As we know, these can vary quite a bit. Your daily rates that you expect to charge in these particular months, and then here's some summarized data that has been calculated for you. At this point we can go straight to the cash flow statement. Here we have very detailed statements. It's month by month, year by year for 20 years. We can see your opening balances, your mortgage payments, etc. Depreciation is naturally not included. It's an income statement item. And your Airbnb fees, and all these fees are escalated according to your turnovers, etc. So this is month by month for you. You can see exactly what your cash position is at every stage of the game, and it will run for 20 years, so that you will have a very good idea of where you're standing and how your particular investment is performing. We can go then to the income statement. Very coherent income statement, everything for you to see. Everything is automated. Your interest on your mortgage balance is calculated year by year. Your depreciation on the capex items that you have in the Airbnb investment. And you can go down here. What we have got is for, depending on which entity you're operating out of, which state you're operating out of, you've got an estimated tax bracket. You can change this as you wish. We can change that, and everything else will flow from there. Again, this is a 20-year statement. We'll change that as well. 20 years of income statement. We've got tax computation schedule built in for you. Your balance sheets also run for 20 years. Here you will notice we have a revaluation account. That is, according to the growth of your property, it will be revalued. Then we've got a revaluation reserve account, in other words, the amount, the changed amount, and then your reserve capital gains tax amount. Now this you can alter. This is for realistic valuations. In case you exit the investment at any stage of the game, we have to consider capital gains tax. So you might be in a state or territory where the average would come out at 22% for you, and all these figures will be altered. Now we cannot reiterate enough the importance of estimating your capital gains tax, because this is also considered not just only your exit value, but we pull that into your internal rate of return, modified internal rate of return, and the net present value calculations, because it is a real cost if you exit it, and if you exit it at a premium, if you've made a gain on the asset. So again, this is 20-year balance sheets, easy to follow. Everything is automated for you. You don't have to do anything other than enter in your input sheet. And as I mentioned again, in your income statement, you can put in your tax amount, and balance sheet, you can put your projected capital gains tax, and everything's calculated for you. Then we have a look at your valuations. We've got a detailed valuation, so it's easy to follow. You can see your cash flows, your exit values, your capital gains tax provisions, your mortgage balances, etc., and the net effect. Yeah, we've got 20 years running of your net present value, internal rate of return, and modified internal rate of return. This is all after tax and capital gains tax. Just for your convenience, we show you what data has been pulled in. You might be targeting a certain internal rate of return and modified internal rate of return. So in this instance, if you're not achieving the desired results, and you feel you are accurate in your income projections, then you would simply go to your input sheet and say the property is not viable at that price. Maybe it is viable at 950K, and we can go back to our valuations and see we are now achieving the types of returns that we had hoped for. So this is an excellent tool for calculating the value of your proposed value of the purchase of an Airbnb and running it as such. You've got a basic dashboard here which will clearly display your loan to value ratios, gross rental, taxable expenditure, net present values, internal rate of return compared with one another, owner's equity and loan account versus mortgage balance, and your pre-capital gains tax value in growth. So we believe it's an excellent model. It's coherent. It's easy to use. There cannot be a more simple Airbnb acquisition model on the market today. Thank you for watching this video, and we certainly hope that you watch some of our others. Goodbye.